Welcome to JC Stocks and Markets podcast for July 26, 2024. I'm JC, been investing in the stock market for 40 plus years. Every other week I publish a new idea on YouTube regarding new stocks or ETFs that I research. Usually do that on every Saturday. Today it's Friday, but well, it's okay. Just sharing because I'm always researching new investment ideas, especially in the stock market. My intentions with these podcasts are to share my thoughts and opinions on stock and ETF picks with an emphasis on dividend-paying securities. I just want to share investment ideas so that you and I can maybe make a buck. I'm not doing this for money from anyone. I really don't care. I don't need money. The opinions here, stated here are my own, and they're just that, opinions. I invest in many of the stocks and ETFs that are featured in these podcasts. Not the one today, but I may consider it. With that, disclaimer, do your own due diligence before investing in anything. You should always do that anyhow. With that, let's go make some money. Today's ETF that I'm going to feature is the FlexShares High Yield Value Scored Bond Index Fund. The ticker symbol is HYGV. It's actually an ETP, but the prospectus states that the investment seeks investment results that correspond generally to the price and yield performance before fees and expenses of the Northern Trust High Yield Value Scored U.S. Corporate Bond Index. The underlying index is designed to reflect the performance of a diversified universe of high-yield U.S. dollar-denominated bonds of companies exhibiting favorable fundamental qualities, market valuations, liquidity, as defined by NTI's proprietary scoring models. The fund generally will invest under normal circumstances at least 80% of its assets in the securities of its index. Some of the stats I really like about this ETP, it provides monthly dividends, and it looks like the distribution yield is about 8.5% to 9%, plus or minus where the share price is. The expense ratio is low. The one thing I don't like is it looks like it's lost a little bit of its value in. So its net capital gains are about minus 18% on the 3-year average. So that's one thing I don't like about it. But, I think interest rates are going down. Federal Reserve is going to cut rates very soon, probably September. And that should do well for this type of ETP. Here are some of the investments of the FlexShares High Yield Value Scored Bond Index Fund, the HYGV. And as you can see, they've got a total of 987 holdings. And their top holdings, the top holding is Carvana. They've got some bonds from Carvana. Less than 1% of the entire fund. So this is really diversified, and it pays a pretty good yield at 8.8%. Monthly payer. To me, if I was to get into this, and I may look at it, depending on what my other investments are doing. Actually, I'm thinking about rolling out of Altria and getting into this, but that's another story. I'm still pondering that. But this would be a good thing to get into. Because it's so diversified, it pays monthly. I like that. I like both aspects of that. The other thing I really like about it is that when you look at the composition, about 90% of these bonds are from companies that are in North America, a few from Europe and very few from Asia. I like that as well. And, of course, they're high yield, very little investment grade, so that's the one thing you got to pay attention to. If credit starts falling apart and companies start defaulting on bonds, look out below. The HYGV ETP has been around for about 5 years, and I'm showing you a chart from Yahoo Finance, but it really does not have a lot of alpha movement. Now, if interest rates start lowering and continue to get lower, I think this is going to go up. But this has been around for 5 years. The highest price of this stock has been about $50. Right now, it's at $41. So it doesn't have the beta is very low on this thing, but of course it's going to move higher as the Fed lowers interest rates. Lastly, if I was going to invest in it, I'd probably piece in, a few chunks, because I don't know if it's going to go back down to the lower end of the Bollinger range, which is, about $40 per share. But right now it's at $40.87, so you're talking a 2% difference. You might put a third as it moves around the range there, but I don't think you could hurt yourself by investing chunk in right now, because you're going to make that up in a couple of months, even if it drops to 40. And I don't see the bond market collapsing anytime soon. Things look pretty good, and bonds are actually in pretty good shape. But again, watch bonds. If they start defaulting, if you're in it, I would get out, because that's what I'm going to do. With that, I hope I gave you food for thought on the HYGV, the FlexShares High Yield Value Scored Bond Index Fund. Take a look at it if you like it. Do your own due diligence. Like I said, it's close to a 9% yield or so. It's a pretty good payback here. So hope you get something out of it. I appreciate you listening. I'm getting a few more views here and there as time goes on. It's not a contest for me, but I appreciate it. Hope I'm offering some good insight on some stocks and ETFs that can get you a little bit of dividend here. So with that, the intro-outro song is a song by a band I used to play in, Just One Goat. It's a song called She's the One. I wrote it. It has special meaning to me. Hope you enjoy it, and all I can say is happy investing, and see you next time. Bye now.
Everything is magical, even when she's not around. No, it's not that radical, I just know what I have found. Well, she's always there for me. It's simple, can't you see? She's the one. Oh, she's the one. She's making my life so much stronger. God, let me stay just a little bit longer. She's the one. Yeah, she's the one. Yeah. Wasted all this